Radio, Brown Skin Investors, every Wednesday, 8 p.m. Pacific, TGN Latinx, Sauce Sun, Investment Bars, here we go, yo. Investment bars, let's start with the golden rule. Play with money that you can't lose, you acting like a fool. Don't gotta be debt free, but you gotta have the bills paid, some money on the side.
Yes, sir. Welcome to Brown Wealth Radio. Now, let's just get the elephant out of the room, gentlemen.
Let's do it.
The room's a little empty today. Our boy Rennie isn't here. If you guys were able to see our, hit him with a little, what are you going to hit him with? There you go.
Sorry to disappoint all the fans.
But he's on daddy duty. He's taking care of his business, but it's all good. So let's just get it started. And Jesse.
Yes, sir.
I know that there's been a lot going on in the market and everything like that, but what are the things that you like to read as far as learning about investing?
Okay, cool. That's actually a really good question, man. I think there's a lot of things out there for people, right? But let's make it simple, right? So the first thing is just books, right? I think the first thing you got to think about is like your mindset when it comes to money, right? Like an abundance mindset, like understanding that money's not scarce. It's not a scarce resource. That shit is everywhere.
Yep.
So I think that's number one, right? Two would be like the book that I talked to you guys about a couple of weeks ago, The Psychology of Money. I think that's a really good book. Money Master the Game is another really good book by Tony Robbins. The third book that I would recommend is called The Dondo Investor. So it's really focusing on low risk, high reward.
Okay.
And then just like to learn more about what's happening in the market, what's happening to different businesses, it would be Zacks. So that's tied to like my Fidelity brokerage. So if I'm interested in a company, click on Zacks and see what they're talking about. Gives you a really good description, different analysts, what they think about them.
Yep.
So that's really like my go-to.
Okay. Dogra?
Well, initially I wasn't really reading into the like mindset aspect of it, learning from people that have been successful and then telling their ways. Shout out Jesse for putting me on game on to really go after that.
Yep.
So the books he talked about, I read Rich Dad Poor Dad myself.
That's a dope book. I don't like the author. That dude's crazy, but it's a good book.
He's a little eccentric, but hey, he shot out some good information and really got my mindset changing.
Okay.
In that beginning, but I really read more on like information of what's going on in the market. The CNBC, the Yahoo Finance, Wall Street, things like that. But really, what I've really taken or really enjoyed is just the conversational pieces that I've had with my boys or people that are in investing, because to me, like, it just gets more information across more rapidly, and so much is happening in the market. So when I get to talk to you guys, other friends about it, and get different perspectives, and there's so much information out there that I really appreciate when information is guided to me to an extent, because then it like just lets me know, hey, if that they're looking at that, I should be looking at that too.
Okay.
What about you, brother? Like you asking us, what about you?
Yeah,
what do you read?
You guys know, being the principal in the group, that means I'm not up on reading a lot of books. No, I would say
you make sure the kids do, though. The kids do.
I'll argue that I'm a very visual learner, so I do like to see a lot of videos. I do like to see a lot, like to hear a lot of podcasts. I think I'm auditory listener as well. But this is not a plug, but this is actually something that I do always go back to, and that's looking at a lot of the stuff that we put together in our Brown Wealth Matters webinar series.
Hey, that deserves a round.
Yeah. If you haven't been able to check it out, you can check it out on our bio, in our link on our IG. We have a 6-part webinar course, and it just gives a lot of the information about long-term investing, not just why, but also how to do it, learning about fundamentals. The information that was really curated by Rennie and Jesse, it really gives me the proper background and the foundation to be able to see and learn what I'm looking at when I'm looking at charts, when I'm looking at earnings. I'll look at them now and I understand them more by going back and checking our webinars. So if I ever want to understand more about fundamental research, I go back to webinar series episode number 4.
I mean, that's great to hear, because that was the whole purpose of what we did when we put that together. Ricks, you admit you were the most beginning to the investing part, and
understanding
the fundamental research and technical analysis behind that. We really try to break it down to where the average person who doesn't have that finance background or understanding about the markets.
And it's also something that we've put on our students to learn and understand. But again, wait, what's going on? What's that? Is
Contamania here?
is Contamania? Where's
Shout
Contamania?
out
I
to
didn't know if they were held.
Contamania.
I don't know if they were
Shout out
looking. Wait,
Contamania, but that's-
oh,
Hey, psych!
wait, psych.
What up? What up?
Rennie, what's good, brother?
Oh,
Our boy is here. So
look
good
who
job on the
crashed
good job on the
crashed
daddy
the
duties.
Party.
Yeah,
That's
good
right,
job on
man.
doing
I
your
got-
daddy duties, but you're back with us, Rennie. You know,
I
so
got
let's
that
just
guy
get
down
you.
just in
Hold
time.
on,
Just
hold
in
on.
time.
Before he begins, we had all that material to make fun
Yeah,
of
we
him,
did.
ready to go. You know, he don't lie. He got more head than he got
Yeah.
body. You know, but we can't use it now, right?
Yeah, and I was so excited. I was like, hell yeah, I'm gonna get to talk on this episode.
Yeah.
No real quicks. No real quick.
No,
No
well, we're
real
gonna have
quicks.
some real quick. So Rennie, real quick, what are some of the stuff that you read and you learn about, you know, being, you know, one of our more astute investors?
All right, guys. I see how it is. You guys just had to sneak those in. I see. Man, but for real, I don't really like reading about. I wouldn't say I don't like reading about investing, but I guess I just I spend a lot of my energy on it anyway. So when it comes to reading, I don't typically read stuff that's like investing related. I am right now. I'm reading this book called The Abundance Code that my wife asked me to read, and I'm really enjoying it. It's about the 7 money myths and kind of how those are passed down to us, just based on the circumstances that we grew up in. So I'm enjoying that so far. But typically I like reading more about like sports, politics. I even read this short book recently. It's like I forgot the name of it, but it's like all about father to son is what it's called. And it's about like just life lessons that this one dad, wrote up, raising his boys. And, I just thought that was cool. Like, so that's kind of more what I'm into when I'm reading, because I read so much like on the news and kind of like what Doger was saying, like just following up with like the news clippings and all that. So I feel like I absorb enough of that as it is. But yeah.
Oh, that's
Awesome,
what's up,
awesome.
man.
Well,
Dímelo, mi gente. All right, so welcome to the 7th installment of Brown Wealth Radio. No luck needed. This week we are a man down.
not really
physically,
though. Yeah,
but he's here.
he
still
lives
blessing
on.
us with his
He lives
presence.
on. Thank you.
So we appreciate you making time for us, Rennie. Daddy duty, comes first. I respect that. But this week we still got a lot of financial fire coming your way, folks. We are going to be talking about the Twitterverse and what our dear friend Mr. Musk is doing. We got some interesting info on some of the biggest tech companies out there and their reportings on earnings.
Mhm.
When your company becomes a verb,
That's real.
that should be pretty interesting. Let's see how they did.
So like, let's Microsoft did, or
Something like that. Something like that. As promised last week, we'll be doing even more information today on financial tools that you can use to help set your kids up for success, whether it be paying for college or starting their own businesses. So excited to cover that during the Brown Wealth Matters section. I know Chris is coming with some more fire on credit.
that fuego.
Yes, sir.
All right. But as always, before we do what we got to do, let's do what he does best, and let's get that disclaimer out there, man.
Let's go. Well, this time I have it on my computer right now because I'm moving up in age, just so you guys know.
Look at that.
But
How many trees did you save with this computer?
I'm hoping none, because I'm still gonna print it when I get home. But
They cut down those trees and printed that paper anyway. Huh? They made that
exactly.
paper
It's
anyway.
already done. But that our disclaimer is that our content is intended to be used and must be used for educational and informational purposes only. It is very important to do your own research, aka do your homework before making any investment decisions, and they should be based on your own personal circumstances. Investing has inherent risk, and past performance does not guarantee future results. You should take independent financial advice from a professional in connection with or independently research and verify any information you wish to rely upon, whether for the purpose of making an investment decision or otherwise.
All right. Damn,
So-
every time he does it, he just gets better and better at it.
That's right. Let's keep this moving.
Hey, yo, what's the 411, hon?
What's the 411?
I got it going on,
Yo, I
hon.
got it going on, huh?
What's the 411?
Yeah. What's the 411 coming at you remote? I'm sure.
Wait to read these articles.
He's got these on deck.
First off, Archegos founder Bill Hwang charged in massive stock fraud. So federal prosecutors in New York on Wednesday announced criminal charges against the founder of a private investment firm and its chief financial officer for alleged manipulative trading and deceptive conduct that led to a multi-billion-dollar fraud. Bill Huang, the founder of Archegos Capital Management, and Patrick Halligan, the CFO, were charged with racketeering conspiracy, securities fraud, and wire fraud. The consequences were far-reaching, prosecutors said. The stock prices of a number of companies were manipulated, employee savings were gambled, and different banks were left with billions of dollars in losses. UBS alone lost $861 million, according to the indictment. The criminal charges followed the spectacular implosion in March 2021 of Archegos, which lost billions in mere days. Prosecutors said Huang traded in a way that hid the true size of his positions from the rest of the investing public. The alleged criminal conduct pumped Archegos' portfolio, which was Huang's personal fortune, from 1.5 billion to 35 billion in 1 year, according to
That's
prosecutors.
35 with a B.
With a B.
Damn,
This
that
is
is
our
ultimate
fellow Bruin alum, by the way. I don't know if you guys
Damn.
knew that. Fellow Bruin alum.
Oh, that's what's up.
That's what they teach you in
That's
UCLA.
good to know.
They
I
teach
wish
you-
I
They didn't
would've
teach
known
me,
that.
bro. I don't know. I might be
I wish I
going to
would've
jail
known that.
today.
Well, I think that I'll say what UCLA does teach. If you're going to do it at a 35B level.
Do it big.
35 billion,
Big.
homie.
Maybe he just
Bro.
learned how to invest using the Brown Wealth Matters webinar
Oh,
series.
no.
No, all right. But what do you think on what went on, Rennie, as far as,
Well,
how was he able to do this?
I mean, he used leverage. I think he leveraged something like 5-1 in his portfolio. He ran stock options, and he actually like benefited probably directly, arguably one of the like most one of the investors who benefited the most from like the entire run up after COVID. So I mean, it's wild. It's crazy. I mean, this guy also like went to Carnegie Mellon. That's where he got his MBA, I believe. He started his own nonprofit, and he was very like active in like the charitable sector. So it's just crazy, that like they could be doing so much. And I can't remember when it went down that this was basically discovered, because it was like margin calls, I think, that were placed towards him once they figured out what he was doing.
Yeah.
And I remember the market dropping quite a bit. And
Yeah.
I think if anything, it was probably a precursor of what was to come and what's happened over the last, few months.
So all this manipulation, when you really think about it, it benefited him, but it probably hurt a lot of retail investors.
Oh,
Oh, 100%.
100%.
I mean, at the end of the day, he lost the 35 billion. So
Did he
Yeah.
though? Did he?
Well,
It's
who
an
knows? But on the
option
flip
here.
side, he probably also helped some retail investors, because a lot of the stocks that he was involved in were, kind of like the famous like retail stocks that kind of blew up. So
Okay.
anyway, let's keep it moving. Adjustable rate mortgage demand doubles as interest rates hit the highest since 2009. So this is one that like hits home to me, because like way back in the 2000s when my parents tried to buy a home, like they used an adjustable rate mortgage, and then obviously there was a big crisis, and they paid the price, right? So but listen up, the average contract interest rate for 30-year fixed mortgages with conforming loan balances increased to 5.37 from 5.2. Just remember, when we started the show, it was under 5%. That's the highest rate since 2009. The adjustable rate mortgage share of applications last week was over 9% by loan count and 17% based on dollar volume. At 9%, the ARM share was double what it was 3 months ago. Applications to refinance a home loan fell 9% for the week and were 71% lower than the same week 1 year ago. So this is kind of like what scares me a little bit, is because I do think this is where, I know we were having like a little bit of a discussion on the chat today about, what's predatory, what isn't, and I think, somebody was saying, that maybe mortgages could be. And I don't know that I agree, but I would say that adjustable rate mortgages can be pretty scary, because I think, maybe this was what happened to like my family like a long time ago, but I think it could happen to a lot of people. I don't know that they understand how adjustable rate mortgages work. I think, even though they're locked in, they might be locked into a certain rate for a little bit, like it'll change, and it usually doesn't change for the good.
No, and
Yeah.
to your point, it's the understanding of it. It's not that the adjustable rate mortgage is predatory, but not understanding what could happen throughout that loan.
Yeah.
That doesn't, the loan officer really doesn't have an obligation to explain that, unfortunately, as they should. You know what I mean? They're trying to make their commission, trying to close this sale, and that's where people get taken advantage of.
Yeah. But
just
you know what?
Just the sheer amount of loans that are being, taken and gotten, and the dollar amount, 17% increase in just sheer dollar amount. Why aren't more people either able to get the fixed rate, or why is the adjustable something that more people are applying for and getting?
Well, let me hit you with this. So, what it comes down to basically is prices are up and rates are up. So the mortgage on a home purchased a year ago at the median price, which at the time was $326,300, financed with 20% down over 30 years, at the
Not
average
Los
rate at the
Angeles.
time of 3.17, came with a payment of $1,320 a month, so $1,320.
Yeah.
The mortgage on a home purchase today at the median price, it's now 375,300. So that's about 50 grand more than what it was a year ago. Finance with 20% down at 5.37 versus 3.17 comes with a payment of 1,990. So you're up 680. So the reason people are turning to these, because a lot of them, you know, they might not get approved because $680 is a lot more to take on.
Yeah.
Right. So that's part of it. And then, you know, the interest and the prices are both up together. So people are like trying to figure out how can I get it? And an adjustable rate mortgage you could lock in at to like the introductory rate, I guess I would call it. It's about 4.28, which is about 1% down from like a 30-year mortgage rate.
But that's a pretty big bet that you're taking, that in, what is it, 3, 5, 7, 10, whatever the term is, you're betting that the rates will go lower by the end of that term, right? Because if not, then it's going to balloon up to whatever the current rate is.
I mean, you know, you told me, right? But I think we're still at historical low rate.
Steve, that's not a good bet because we are technically still at historical lows. I think people go to the adjustable rate mortgage because they're hoping to refinance to a regular fix later on. Is more of the approach I think people would be taking.
Got it. Okay.
Yeah. Well, we got one more. Maybe this one will get it going a little bit. So Elon Musk, Rick's favorite, already at risk of violating a key provision of his deal with Twitter.
Surprise.
So according to a SEC filing shared by Twitter on Tuesday, Musk is permitted to issue tweets about the merger or the transactions contemplated hereby, so long as such tweets do not disparage the company or any of its representatives. So in other words, he can tweet about the deal all he wants, but he can't denigrate Twitter or its employees. But apparently, once again, Musk seems unwilling to moderate himself and has done so at the expense of a top Twitter exec.
On Tuesday night, popping ish.
Musk replied to a tweet about an earlier political story that reported Twitter's top policy exec had cried during a meeting with staff discussing Musk's buyout. The original tweet noted her role in Twitter's handling of the Hunter Biden laptop story in 2020. And he responded like this: suspending the Twitter account of a major news organization for publishing a truthful story was obviously incredibly inappropriate, he responded. And on Wednesday, he targeted her again, tweeting a meme based on her appearance on a 2019 episode of Joe Rogan's podcast. So here's what I'm gonna say. It's not really a meme, like in a bad thing. If you actually look at the tweet, it's more of like an infographic than it is a meme. But yeah, what do you guys think about this?
I think it's Elon being Elon, man.
Yes, sir.
He likes to pop his shit. He likes to talk that talk. He's the dude that's gonna keep pushing the envelope as far as he can.
And I know that we've had a lot of conversation, a lot of back and forth about Elon as far as whether he really is the GOAT or he's above reproach or he's the best person out there. I mean, I will say that based on our conversations, you know, he could do better by this business. And in listening to things on podcasts and stuff like that, the truth is Twitter probably will never get cleaned up. It can never get cleaned up. It's going to be filth regardless, right?
Okay, we'll give more context to the conversation. The conversation we had was him wanting to bring free speech back to Twitter.
And what it could possibly mean as far as inciting hate speech, as far as inciting right wing or just hate speech in general, you know, specifically whether he brings Trump back or whatever. And I do know from his record that he has been somebody that's gone against Trump. But when you're talking about free speech, we've talked about specifically how far should it go?
Right.
And should there be any censorship? Should there be anything that doesn't allow for hate to be incited?
Well, I mean, he did clarify that free speech within the confines of the way the law dictates what free speech is.
Yeah.
Correct.
It's not like, oh, just Wild Wild West, anybody say what they want, do what they want.
But is that what he means? If he can go out there and pop off kind of whenever he wants on whoever he wants, you know, even on his own company, risking his own like his own purchase of this.
But I don't see what he was saying as like hateful. I see him, like he was just talking shit.
No,
like,
he's giving his opinion, which is allowed.
Okay.
Right. And I think that's a good point, right? Like a lot of people get, you know, they get their underwear all up in a bunch because like somebody's disagreeing with them. Like, bro, if you're mad about the disagreement, then step your argument up.
Yeah.
Yeah. I mean, I just think, you know, clearly he likes to stir the pot. I'm a fan of Elon's business acumen, and he seems like just like a person that you probably would love to maybe have a drink with. I don't know that you'd want to have like a long conversation with him, but clearly like he just loves to stir the pot. And I think this is what he's doing. If you look at his Twitter account for like the last couple of days, he's been kind of going on a rampage, and previously he might go days without tweeting. You know, I'm not a big fan of it in terms of like how much attention and energy it's going to take away from like some of his other businesses. But I mean, I think he's proven that he can handle, you know, multiple businesses. I'm not sure that he's here to like save Twitter. I don't know that it's savable anymore. You know, I think it is what it is. But you know, I think it all comes down to what perspective you have.
Sense,
Yeah.
though? Like,
I think this statement does a great job of summing Musk's position. You know, Musk has claimed that he wants Twitter to be politically neutral, which in estimation effectively means upsetting the far right and the far left equally.
Yeah.
Because there is going to be dialogue on both sides that, you know, is going to bother someone who is pro-right or bother someone that is pro-left, which is no way you can make everybody happy.
And that's why I think I also have, understand a little bit better that, like, you know, hate speech is hate speech is hate speech. And everybody's gonna, you know, it's there.
Less
Twitter is going to be a cesspool regardless.
I mean, I wouldn't call it a cesspool. There's a lot of great information out there.
There is.
There's a ton of
But
great
based on algorithms will get all, you know, will get you caught up in that stuff.
But you technically control that algorithm.
Yeah,
like if you don't hit the like button and you don't retweet the shitty information or the hateful speech, then you're not going to see that. Like,
so I guess,
at least not as much.
So I guess with everything, we will have to see what happens. And at the end of the day, you got to give somebody a chance to either prove you right or prove you wrong.
Well, it's not just give somebody; it's the richest man in a
to ever walk the earth.
World. But I'm glad you said that, because this is what rich folks do, right?
Yes.
Rupert Murdoch, super wealthy. He owns Fox News. Elon is going to own Twitter. Bezos owns the Washington Post. I think Carlos Slim owns the New York Times. I don't know if he still does.
Yeah.
These are all billionaires. Like Carlos Slim at one point was the richest man in the world. Elon is the richest man in the world. Jeff was
Zuckerberg, you know, with Facebook or Metaverse.
He's got right. So like everybody, when you get to that level, right, that amount of money, it's to get power. And then once you get that power, you want to control the narrative. So it just made sense for another rich billionaire to go buy some sort of news outlet, social media. Like that's where a lot, like that's the thing about Twitter. I think what made Twitter pop is like really good journalists. That's the first place they go to report.
Yeah.
Like, that's when you get that like initial,
this
is what's happening in the world.
It's the immediacy of it,
the
which
beauty
is good.
of Twitter, you got to be clear, concise, straight to the point.
Yeah.
So like it makes sense that now he has his own kind of like news outlet, if you want to think about it that way, for Twitter.
Yep. And again, if you're just tuning in, you are listening to Brown Wealth Radio here on TGN Latinx and the Good News Radio Network, or if you're catching us on YouTube, thank you very much. So,
and you know, whenever you're listening to the news, we got to remember,
if you don't read the newspaper, you're uninformed. If you do read it, you're misinformed.
All right, well, let's talk about how these markets did today.
How did they do?
I need a dollar, that's what I need.
Hey.
So let's talk about the market going on today. And like what happened last week, we had three of the major indexes go in different directions. So because the S&P 500 is the one that we really like to talk about and look at, it went up. So my boy hit me with something. You got to get me with that Masmaiz, man.
Oh, my bad. I was too
Yeah,
busy
we're
reading these.
you know, I mean, it was not a Masmaiz day. Honestly, it was like,
Hold on.
Today is not Masmaiz, bro.
Get to the comments. Let's see some comments.
All right. Let's see.
Yeah.
Let's get it.
It
So
looks like we stirred the pot a little bit.
We sure did. We got Victor on the check-in.
Our boy
Scratch
Vic
on the
and
check-in.
Scratch.
Oh,
Leo.
Leo.
What's the Leo saying?
TGN from TGN Latinx.
Check it out, folks. If you have not tuned into the TGN network,
My boy
and
Caesar Leo knows it all. And he knows more than you do.
Tuesdays at 1 p.m., right?
1 p.m. Yes, sir.
And make
One
sure
thing
y'all
he
tune
definitely
in.
does is he keeps it 100.
Yep.
So,
like he did.
Caesar Leo's asking, yo, quick question. What does Elon Musk buy and Twitter do for my shares? Will they automatically give me money for them?
Oh, yeah. You're
Yes,
getting cashed
sir.
out. You're getting
So-
cashed out.
It all
Yep.
depends on when you bought those shares, right, Caesar Leo? So if you bought them, let's say 10 years ago, you probably didn't make any money on it because Twitter's been flat for the last 10 years.
Yep.
But let's say you bought it down when it was in the 20s, 30s. Like now, when this deal goes through and he's buying it for what, $59 and change?
Yep.
54.
54. Yeah.
$54 and change. That's what you're from whatever you bought to that price. That's going to be your gain, and you'll get that in cash.
Yep. And then we have this guy named Renee Sanchez saying,
Yeah. So
well,
real quick though,
there you
just
go.
one thing to call out about that. So you'll get 54 if the deal closes. If the deal doesn't close, I think you're going to see a dramatic drop. Twitter has a gap to fill, I believe, in the 30s still.
Oh wow.
So if it doesn't go through, it could really fall through. I'm not saying, it's your decision when to, buy and when to sell them. I'm sorry, but if you hold on and the deal goes through, you'll get $54 or so a share.
All right, sounds good. Our boy
right.
Ruben coming through, always supporting as always.
baby.
Oh baby, oh baby, oh
Shout out
baby.
baby Malia. Shout
out baby Malia. One of our first supporters, Carmen's on, and she's talking about the 529s. Don't worry. Let the market do its thing, and we're gonna have some more information on 529s and custodial accounts later on. So
You right about
just
that.
sit right there. But just again, our S&P went up to 4,183.96. The Nasdaq and the Dow both went down today, but don't worry. Like we said, don't worry. Tranquis. Vamos bien.
Long-term investing.
So, yep.
Listen, if you're paying attention to the market, what we try to teach you guys is these are the moments when you can start creating wealth. You don't want to buy when it's at the high. You want to buy when it's at the low.
Buy low, sell high.
So who knows if it's going to go lower? I don't know.
Yep.
Rennie might know because he lives in the charts, but I don't know when it's going to go down. I don't know if it's going to go back up. So these are the opportunities that we want to capitalize on, right? So pay attention to the really good companies, right? Your Apples, your Microsofts, your top players, right?
Yeah.
Tesla.
Listen, I love me some Tesla,
Even
man.
though Bill Gates $500 million short on Tesla.
Listen, at the end of the day, I get the play.
500
but
million?
I respect Elon's gangster.
Respect the hustle.
For those of you who don't know, Bill Gates reached out to Elon and was like, "Hey, I
got
want
a philanthropy opportunity.
A philanthropic opportunity." And Elon being the G that he is, said, "Don't you have a negative position on like you're shorting my stock?" Oh yeah, I haven't closed it yet. And he pretty much told him to kick rocks.
He said, "Deuces."
Yep.
And said, "How are you gonna do something philanthropic when you're shorting the one company in the world that's doing the most, right?
Climate change."
So I'm gonna let you guys think about that.
Don't worry, we're gonna get back to earnings as well. We'll be right back with Brown Wealth Radio. Ya tu sabes.
Climate change.
So I'm gonna let you guys think about that.
Don't worry, we're gonna get back to earnings as well. We'll be right back with Brown Wealth Radio.
Are you trying to buy a home, car, or make other investments and being discriminated against because of your credit score? At credit909.com, our professionals can help you remove judgments, student loans, child support, medical bills, and other erroneous and negative items on your credit report. Call 800-752-9763 today for a free credit analysis and consultation, or text credit to 909-688-5461.
Hey besties, it's Chanel from Brunch with Besties podcast. Join me and my bestie, Sherry Renee, each and every Monday on TGN Talk at 5 p.m. Pacific Standard Time, 7 p.m. Central Standard Time, where healing meets purpose.
Are you looking for the best barbershop experience? Then the Locker Room Barbershop is the place for you. Check them out at their new location, located at 16900 Lakewood Boulevard, Unit 204, in Bellflower, California. If you would like to book an appointment, you can check them out at thelockerroom05.com or on Instagram at The Locker Room Barbershop LLC. Feel free to call the number 562-0296.
Got it.
Again, the phone number
Good,
is
bro. How we doing? Can you guys hear me all right?
602. And wait to see you at the Locker Room Barbershop.
Everyone, it's your girl Jules from the Primo Chidos. You know that recent studies have proven that the Primo Chidos radio increases life expectancy and loss.
Yeah.
So make sure to catch us every Thursday at 12 p.m.
Oh, I hope it might be because I'm light, but we'll see. Okay.
Ladies and
All right, for sure.
Where was that Lopez energy, though, man?
I know he was so friendly. I was ready to fight.
4 elements of hip hop. Are you ready?
All right, fellas, let's do this.
101game.com. Hip hop. 101 game.
Yo, what up? It's your guy E Lamb, the Wild Child of TGN. Make sure you tune in to Courtside Radio every Monday and Thursday at 6:30 p.m. Pacific Standard Time here on the TGN app. Courtside Radio, where if we were any closer, we'd be in the game.
Only on TGN Sports. Hey everybody, it's your girl Sharique LeMay, and make sure you are checking out Limelight Live Show on TGN Talk 7 p.m. every single Thursday. That's right, we're talking creative news and reviews and the best of it. Catch us then.
Are you trying to buy a home, car, or make other investments and being discriminated against because of your credit score? At credit909.com, our professionals can help you remove judgments, student loans, child support, medical bills, and other erroneous and negative items on your credit report.
Yes, sir. Can you guys hear me all right? All right.
sir.
So welcome back. We are Brown Wealth Radio here on TGN Latinx and the Good News Radio Network. It's your boy Ricks along with my boys Dogra and Yessie here on site. Our man Rennie's over there on location from his house. And if you haven't seen his house, it's gorgeous. You can see it all on his IG videos and stories.
Hey, not mine, bro.
You see the air fryer and the oven?
Yeah, the dual combo. I'm about to go over there for some meal prep love.
The wave,
you know what I mean?
Wave hand faucet.
Oh yeah, that's
and
Yep.
the loose.
It's fancy. It's fancy.
Yep. But
The
before
loose
the
window
break,
lock?
before the break, we covered a little bit about the market. We talked some good news, some good information, some information going on with Twitter buyout by Elon, and a little bit more. And remember us, you can follow us on social media at the Brown Skin Investors, where we post and share clips, financial literacy announcements, and more. Plus, as we talked about at the beginning of the show, you can use the link in our bio to purchase our Brown Wealth Matters stock course webinar series and our Brown Wealth Matters merch, which we have on deck today, and more. And also, if you're trying to build a business on your own and want to get your name out there, what are you going to do? Hit us up on the IG and we got you. Advertise your business or ventures with us and the Good News Network while the prices are still low.
But I think we should do something better for our listeners.
Oh, that's right. That's right. Let's give them some love. Go ahead.
I think so. I think this is what we're going to do. Rennie's at home. He's going to drop a discount code. Brown Wealth Radio.
Brown Wealth Radio.
Click the link in our bio and you will be able to get our course and our merch for 50%
Half.
50.
All right.
All purchase adjustable rate. Thank you.
There we go. Monica wants a black shirt, so let's make sure.
What's the code again? Sorry, what's the code?
Brown
Wealth Radio.
Brown Wealth Radio.
And that beautiful young lady, Monica Varela Gonzalez, I will get you that black shirt on the
Gonzalez?
ASAP.
Monica Gonzalez.
Yeah.
How'd that sound, Rick?
Taking my first name and my last name.
There you go.
I think she should get one, and you should buy her one.
There you go.
Agreed.
All right, well, let's jump into these earnings, man.
All right.
Bad Bunny is ready to talk about this dinero. So, Ren, you want to kick us off with Microsoft, and I'll jump into Google right after?
Yeah, and are we doing 3 or just those 2?
We'll see what time permits.
Yeah.
I was trying to frame the time, but okay. Well, let's see.
All
we'll see
three
what
of
time
y'all.
permits.
All three of y'all.
We'll do all 3. Okay.
Yeah.
So Microsoft. First off, yesterday it closed around 270. It ended up about 5%, about 4.8 today. At one point, it was up as much as 7%. So obviously, there was a very positive reaction to Microsoft. Why? Well, they reported net income of 16.7 billion, which was up from 15.46 billion a year ago, and their earnings per share was 222, which was up from 203 a year ago. And they came in at 222. Analysts were expecting 2.18. So the company's cloud business logged about almost half of that revenue, which is amazing to see the growth in cloud services for Microsoft. And they had quite a few price targets that were hiked up to about 350 or so. A couple of them went up, a couple of them went down, but that was what seemed to be the consensus among everything that dropped today. They ended up closing at 283.22, which is about 20% off its all-time high. So, there's obviously some room to grow, whether you look at the analyst price targets or whether you look at its all-time high. Pretty impressive earnings report. I think I probably speak for all of us when I say we're fans of Microsoft. So, I'm in Microsoft. What do you guys think?
Yeah.
I'm heavy into Microsoft right now. I've been buying shares all the way down to this 20%, 25% off its high. Microsoft is still Microsoft, right?
Microsoft, yeah.
You still got Word on
You
your
still
computer,
Microsoft
right?
it. Yeah, of course you do.
Okay.
Yeah.
You still use Outlook at work?
Of course I do.
I still get on the line and use my Microsoft.
Oh, okay. All right,
You know
cool.
what I mean?
So this is a great example. So this is a company that we all use. We know it's one of the biggest companies, not just in the US, but in the world.
Yep.
And it's still 20% off the highs. Did anything change with Microsoft's business model?
Not at all.
No. Well, I mean, when you're looking at the earnings, for the people that are watching or listening and want to understand a little bit more about what these earnings share, they can obviously check. They can obviously check out our Brown Wealth webinar series, but give them a little tidbit of what exactly it looks like and what they're actually sharing.
Okay, so like we told you before, earnings is a company's progress report, right? So you have these analysts that work for these different institutions, and their entire job is to learn everything they can about these organizations. So they make these estimates, right? Like, oh, we think based on what we're seeing, based on what we're reading, based on how Microsoft
based on previous numbers, based on
we think they're going to hit this amount of earnings per share, this revenue, these numbers, right? And when you don't hit those numbers during earnings, people tend to overreact.
Yeah.
And that's a perfect example of the next company we're going to cover, which is $G00G, Google or Alphabet, the Alphabet Boys. Right?
Yeah, the Alphabet Boys.
So Alphabet
closed around 2000.
My bad. I missed that one. I forgot.
What happened?
No, I forgot that you were doing Google this week. I forgot.
Oh, got it.
Today, I don't know.
Because I'm not there with you guys, man.
When you're not here with us,
I can't pick up the cues. No
Our
chemistry.
dynamic is thrown off. We have these two trying to segue into the break, and I got these two arguing who's going to cover Google. Let's get the people the information.
Let's go. So it closed around 2,370 on Thursday, ended down 3.67% on Wednesday, closing at its lows for the day at around $2,285 with 89 cents. So reported earnings per share, $24.20 versus an estimate of $26.11.
So they missed.
They missed on that. Revenue. They beat revenue, 68 billion versus 67.8 billion. Correct, right? Just barely.
Yep.
I don't know if you can throw anything with a B and then say the word barely right after it.
Well,
I guess when you're Goog.
Here's the thing, right? I was reading a lot of these things about Google. They're like, oh my God, it was such a bad earnings report. Their YouTube business is declining. So let me just read you guys some numbers. So their revenue from last year to this year went from 41 million to 55 million. Sorry, billion with a B. They increased their revenue by 34%. Their operating income also grew. Oh, I'm sorry. I am looking at March 2021.
Okay.
My bad. I was looking at the wrong picture. But here's the thing. So they beat revenue, and while the rest was coming from YouTube and their cloud services, right? So their cloud services is still not as profitable as they want it to be. You guys have heard of Waymo? You guys know what Waymo is?
No.
So Waymo is their like life sciences and autonomous driving program, right? It's still losing a ton of money for them, but it lost less money, 930 million. Yeah, 930 million from 970 million.
Yeah.
So everything they're doing is getting better.
Yeah.
Right. So when we think about, like they missed the guidance, dude, what is there to miss?
Well, like you were saying with the couple years ago information, you know, we as investors sometimes, fall into, love with these companies that continue to outperform and outperform and outperform. And when they finally, maybe you could say come back to reality or perform at the level that they've been performing, there's a negative reaction to it.
Right. So here's the negative reaction. From 2020 to 2021, they grew 34%.
Yeah.
From 2021 to 2022, they only grew 23%.
Hey. And that's not even counting for Brown Wealth Radio now being on YouTube, where you catch us every Wednesday at 8 p.m. Pacific.
To be specific.
There you go.
Absolutely. So that's what I'm talking about when we think about these overreactions when it comes to Google. When you say you're looking for something on the internet, do you say, hey, I'm going to go DuckDuckGo this?
Nah, but
do you say, hey, I'm going to go Microsoft Edge this?
I'm going to go Bing it.
Right?
I used to ask Jeeves.
Right. But Google is still the verb when it comes to searching on the internet.
Question for you. How do you feel about the 70 billion buyback that the board authorized? The share, buying back 70 billion of shares.
You know what? Do you guys know off the top of your head what their market cap is? I want to say it's like near 2 trillion.
I think so.
Something like that.
1.5. It's 1.5. So how much are they buying back again?
70 billion.
70 billion. So I mean, if you think about it, that's about 5% of their shares. So they're literally buying back 5% of their shares, which means that there's 5% less shares in circulation. So I mean, we're talking about one of the greatest companies to ever exist, period. You know, I missed Google, and I actually just got back in on this little you know, pullback that it's having right now. I have a couple alerts, like not alerts, I actually have orders ready to go because I want to buy some more. I just want to buy it a little bit cheaper. So, you know, as far as when you combine the buyback, when you combine everything that Jesse touched on, like, it's Google, man. Like, you know, Google me, bruh.
Yeah, exactly. So check it out. So the advertising for revenue for YouTube, it was only $6.87 billion.
Wow.
The Google Cloud revenue was only $5.82 billion.
Yeah.
Now, what's interesting to me, and we've kind of talked about this in the chat a little bit. So Google spends a ton of money to be the primary search engine on, for example, Apple devices, right? Like they pay Apple to make Google the primary search engine on Safari.
Yes.
So that's their traffic acquisition cost. $11.99 billion is spent on traffic acquisition.
Yeah. Well, I mean, it seems to work because everybody Googles. Everybody Googles.
Even Carmen said, right? Even in Spanish. What is it? Googlealo.
Google, yeah, they go Googlealo.
Yeah, exactly. I learned something today.
There you go.
Yeah, exactly.
Google's your friend, bruh.
So when we were talking about these, like, you know, if you're investing in these 529s or you're worried about, hey, the market's going down, listen, tell me the company that's going to knock Google out of its spot. I'll wait.
Get the bag.
Well, you know, I know we got one company left, but you know, since being that I'm at home and we haven't done this, you think I could like share a quick Google chart and maybe share my levels real quick?
Do what you got to do, bro. Let's see if we can make this happen.
So let's see if it works. Let's see if it works. So I'm sharing my screen now. All right. So
we still see your face. We still see your head.
Thank the Lord.
We still see the big head.
Hold on, it's coming. It's coming. It's coming.
It's bigger.
Wow. Pause.
How about now? Can you see it?
It's there. Yeah, we just gotta add it to the screen. There you go. There you go.
Boom.
Hey, boom.
Right. Let me turn these indicators off real quick. So I basically, like I was saying, you know, I picked up some Google and I have some orders set right here at 2175 and I think about 1975. So on the show, you guys have heard us talk a lot about gap filling, and that's been something I've really been, you know, pivoting to because it almost always happens. So why do I have 2175 and why do I have 1975? Well, if you look at 2175, right around this gap right here that never filled. So if you look at one of our posts, we'll explain what a gap is. But right here, there's a little gap that never filled. Why do I not put my order at 2120? Because I don't know that it's going to get there. And if it gets that close and I miss it by $50, I'm never going to like forgive myself, right? Now look a little bit below that, and there's another gap that hasn't filled up yet. So I have the order in at 1975. I think that once it would cross into this gap, it would definitely keep going down because at that point, there'd be quite a bit of momentum. So that's kind of what I'm looking for from a Google standpoint. Now, I don't know that that's ever going to happen. That's why I already got in and got a level that I'm actually slightly down on it. But I see that I have a gap to fill to the upside now. And I also have another one here. So I don't know which way it's going to go. Like Jesse said, you know, this is a long-term investment for me. Without a doubt. So if it goes cheaper, I buy more. And if it goes up, then, you know, I celebrate the wins. But Google, like, you know, like you said, once it's a verb, like, you know, it's kind of hard to argue against its value. Like you know, 3,030 is its all-time high.
Friend, bro.
Yeah, exactly. But a lot of different companies came out today with new price ratings. And even though they decreased some of them, most of them are still like 3,500 plus. So, you know, it's at 280 right now. So you do the calculation, that's quite a return.
We always say when a company's name becomes like the verb used to do or to discuss something, that's a good sign.
Yep.
So with that being said,
let's keep it moving.
Let's keep talking about this cream, folks.
Get that money.
Dollar bill, y'all.
Yes.
Is it cash rules everything around me? Nah.
Credit rules everything around me, baby. I want them points. I want them rewards. I want to use my credit.
That's right.
Hey, did you see that story we put up, Doger, real quick? You know, from the on our stories, the post from investing. I thought that was dope. It was like this girl who said, you know, she's interviewed a lot of very, very wealthy people, and she talked about how all of them use credit. They all finance. They drop as little down payment as possible, even though they have the cash. So it just
Yeah.
speaks to what you just said, bro.
Of course, 100%.
That's
You know,
right.
she basically said they have the money to buy their car outright. They still finance it. They have their money to buy their house possibly outright, or at least pay 50% of it. They still finance it.
Yep.
And the reason they finance it is because of the great interest rate that they get on those type of loans, because of the great credit score and the great, cash flow
Liquidity kind of
liquidity
thing.
that
Yeah.
they have behind it. But yeah, let's talk about another gem that we could share with you guys on your credit building journey. You know, last time we talked about how many credit cards you should have. And again, there's no real right answer to that. It's more of what you can manage, you can handle, what makes sense for you personally.
I added one this week just to be tied with Jesse, just so you know.
Hey,
So-
clap it up for him.
I had to get me one more card. So I got me another card.
Which one did you get?
I got me the Southwest through Chase. And what does that do? My utilization rate goes down. I'm able to get points now on the airline that I fly, and I get points for paying my bills. So boom.
Hey, let's go, Rick. So what we're going to talk about today. So, when we talk about using your credit, we say get rid of that debit card. Don't use that credit card. Use your credit card. Whatever balance you get on it, just pay it at the end of the month. Pay it at the end of the month, right? You don't
When
want
your
that-
bill is due, right?
Yeah, that's kind of what
Yeah.
we've been saying. When
Yeah.
the bills due, you pay at the end of the month, right? And that protects you from predatory interest rates, keeps your credit score in a better position. But let's take that to another level, okay? And this one, I might not even have shared with you guys too much yet. So
have not
to even go even more into how you can make that a better situation for yourself. Instead of waiting for when the credit payment due date is, you should actually set up your payment for when the credit card statement closing date is. Why is that? Well, let's say from January 1st to February 1st, you spend $2,000, right? The credit card company doesn't ask for $2,000 on February 2nd. This statement closing date is probably January 30th, February 1st per se, but the payment due date isn't for another 15 to 30 days after that,
Yeah.
right? But when the credit card statement closing date happens, that's when the credit bureaus take a screenshot of your credit, right? So let's just say, for example, you have one credit card, only one, limits 5,000. You spend $4,000 on that credit card. 80% of that is usage, right? 4,000 from January 1st, February 1st. If you wait till February 15th or February 28th, whenever that payment date is due, you're using 80% utilization right there.
Yeah.
Because they're taking the snapshot of your credit at the statement close date. So I want everybody to go into their auto payments that they have set up, change that from your payment date to your statement close date.
Is that a quick thing? Is that pretty easy for somebody
It is
that just
very
has it
quick.
online? Okay.
Very
just,
quick.
Just
Now
for
with
everybody
tech-
at home.
Now with technology, I tell everybody, you log into social media, you get on the IG, you look at Snapchat, you download the banking app, Chase. All my credit cards with Chase are on there. It says it right there on there. When is the statement closing date?
Yep.
And when is your payment due?
Yeah.
Okay. So it's just a little shift in the mindset, a little shift on when you have
When.
the auto payment set up. You do that, and I guarantee you your credit score will go up. Why? Because when they take that snapshot, it won't have whatever balance is on there.
Yeah.
When you pay it on the closing date, you're protecting the interest, right? Avoiding the interest,
Yeah.
right? And you're still staying in good standing.
Yeah.
But if you do it on the statement date, your utilization is going to be so much lower. And that's what impacts your credit score.
Okay. So Carmen in the comments is actually asking if you're able to negotiate your APR. Even if you have a good score, are you able to get it lowered based on the card, or is that just what the card agreement does?
So it depends. It depends how long you've had a relationship with them. It also depends how much utilization you have with them.
Okay.
If you have a $5,000, $10,000 credit limit and you're only using $200 worth a month, $300 worth a month, they have real no incentive to lower your interest rate.
Yeah.
Like, you don't do much business with me. I don't need to do you a favor. Now, if you're somebody who uses $3,000-$4,000 of that $5,000 balance a month, even if you pay it off, you're showing you're doing business with them. In all honesty, it's unfortunate, but credit card companies are waiting for you to mess up. They're waiting for you to slip up, not make that payment so they could get that interest because they're protected. If you don't pay your credit, what happens?
They write it off.
They write it off.
It's a write-off for them.
They're gonna get their money regardless,
Yeah.
or they sell it to a collections, pennies on the dollar, and then write it off.
Yeah.
So it's a win-win for them.
Yeah.
It's I'm gonna get my money now when you pay me, or I'm gonna get my money later. But great question, Carmen.
Yeah, thank you. And don't worry, you're gonna have to add another one because she said she added one last week to catch up to me, and now I'm one ahead of her. So I guess we're in the credit race now, so that's good. It's like an arms race.
It's like it's a rebellion or something.
There you go.
De la historia negra, de la historia nuestra, caballero. Y dice así.
Take that.
Get up,
The
Brittany.
remix.
Baby.
Yeah.
All right. So let's jump right into this Brown Wealth Matters topic, right? So we keep talking about how do we set our kids up for success. Last week we talked about that 529.
Sorry to interrupt you, but I have an important shout out I gotta do. Saturday is actually my daughter Maya's birthday. She'll be turning 4 years old.
Give her a round of applause right there.
Yeah, happy birthday.
I want to shout out my baby
my
girl
boy.
Maya, the apple of my eye, my everything. Hopefully in a couple of years she'll be able to go back and watch these videos and see what it is we're doing for people of color and people like us, and just trying to provide that education. But she's the reason I do what I do.
And she's gonna ask you, Dad, do I have a 529 or a custodial?
Yeah,
And what are you gonna say?
She actually has a custodial account.
There we go.
Got it. There you go.
But
So
go
let's
ahead,
talk about
go ahead.
those.
No, that's great, man. So happy birthday and shout out to Maya. And we'll be sure as the Brown Skin investors that we're adding to that custodial account, because I'm
Yes,
not giving you
sir.
a gift. I'm giving you
I'm not
money
buying
for
you
these,
nothing.
for
I was
this
gonna go to
wealth grow.
big box retail, but I'm just gonna give you some stocks instead.
There we go.
Man.
There you go.
All right,
Greatly
folks.
appreciated.
So we have our 529 account that we spoke about last week, right? You've got your prepaid tuition, where you can pay for the credits ahead of time at today's dollars, or you can do an investment account with the 529 where you're hoping your money grows to offset that cost. Well, there's two other ways that you can do this. Maybe you don't know if your kid is gonna want to go to college. Maybe they're showing you their entrepreneurial spirit at a very young age. So there's other ways that you can do this. So depending on what state you live in, you can either have a UTMA or an UGMA. So what is the difference? So let's start with the UGMA first. Universal Gift to Minors. The A stands for ACT. So in these particular accounts with UGMAs, you can hold individual stocks, Apple, Microsoft. You can hold bonds, mutual funds, index funds, even cash, and insurance policies, right? So this is a great way for you to transfer that wealth down to your family and not have to worry about a lot of things. So what's an UPMA? Well, an UPMA does everything that the UGMA does, plus you can hold physical assets. So what do we mean by physical assets? Real estate, fine art.
Like our mixtape?
Like your mixtape.
Got it.
But really, your mixtape would fall under intellectual property.
Oh,
right? That's you. You created this. So now that's yours.
So it's intellectual property of fine art.
Correct.
Got it.
There you go. Go ahead.
NFTs.
NFTs,
baby.
Okay.
All right. So now, to be clear, both of these types of investments accounts are tied to the $16,000 gift max. And who pays that tax? The contributor does, right? So I can give him 16K. Rix can give Maya 16K. Rennie might double up and give 32K.
Oh, yeah. He got that
Because he
baller.
can.
But then Rennie would have to pay. Rennie would be the one paying taxes on that additional 16.
Ah.
All right. So let's talk about how these custodial accounts work. They vary by state. So the first thing that you want to talk about is, when does your custodial ownership end? And what we mean by custodial ownership is, like, I have an UPMA for both of my daughters. So I am the custodian. I'm the one that controls what happens to this money. So I'm supposed to do everything in my power to make sure that every decision I'm making is for them. I'm not taking that money out of the account to go pay my car note. If I need to take that money out, then it's to pay for their education, pay for their preschool, whatever that looks like, right? But we're not going to do that. We're going to let that money compound. You, depending on the state that you're in, for example, I'm from New York. The age at which the UPMAs and UGMAs transfer over to the beneficiary is at the age of 21.
So it goes straight to them no matter what.
Straight to them. And at that point, it's them. They own it to make whatever decisions they want. In California, you actually get to pick the age, anywhere between 18 to 25 years old.
But it goes no matter what.
Correct.
Yeah.
So I can say, hey, Ricks, I'm going to put yours at 24 years of age because I think you need a little bit more time to mature and not blow this money on.
Too bad they can't do it to 35 for Ricks.
But let's say
I
that
would already
happens,
have
right? There is a caveat to that. Like
Yes,
you
there
can
is.
put it as the custodian. Hey, I don't want my kid to touch that money so they'll 24. But once they turn 21, it's legally theirs. They can say, nah, I want that money now.
Not
So-
at 18.
Or again, depending on the state.
Yes.
Like there are some states where it legally turns over to them at 18.
So is that one of the major differences as far as when we're talking to people about whether they should do a 529 or an UGMA or a custodial account?
Part
Is
of
that
the
one? Is that one of the
differences.
one of the
One of the
differences as far
differences.
as if the kid doesn't use the 529 for educational purposes, that they're able, you could transfer it to another child.
You
And
can't
with-
do that with the UTMA and the UGMA.
Yeah.
It transfers to them. It's theirs, and they don't have to spend it. Like they can just
Yeah.
let it continue to grow, and they
Yeah.
can start
Right.
adding money to it and let it compound and compound, and maybe that becomes their early
Yeah,
retirement
yeah.
fund.
And we do have, you know, about 90 seconds left. So I do want to ask you guys, being parents that have already started these custodial accounts, what made you guys decide to do that over a 529?
Well, you guys have heard all of my rants on the cost of higher education and whether or not it's the right decision. I want to give my kids that flexibility. Like, what if they don't want to necessarily go to school? They want to open up a business. Like, that's what I'm trying to teach my kids is how they can become entrepreneurs, open up those lemonade stands and really start to make money that way. So I want to do that and then maybe use those funds to fund their first business.
I also think I've learned the education of how to get college paid for. Being on a
Word.
full ride scholarship because of education, academics,
Yeah.
because of sports.
Yeah.
Or if I would have known about the Gates Award, the Bill Gates scholarship. I knew a lot of people at UCLA that had the Bill Gates scholarship, and no shade on them, but I
Yeah.
thought I was better than they were.
Yeah,
you know
yeah,
what
yeah.
I mean? I just
Well,
didn't
for
know
me-
to it.
Rennie?
For me, I went custodial. I would say the main reason for me is honestly accountability. I think the fact that I have to give it to him is good because I could see myself getting mad and being like, "Nah, you ain't getting this shit." But that's why I did it. Secondly,
I don't buy that.
But secondly, it's because I don't want to limit him to just deciding to go to college. It's whatever he's passionate for. As long as he believes in it, he's going to give it 100%. I'm going to support it. So I wanted to have some flexibility around that. So those are the two main reasons. I will say I might look at doing a 529 because I like a lot of the tax benefits
You
associated
can
with
have
building
both. You can
generational
have
wealth.
both
You
because that's
can
what
do
Carmen's
both.
asking. Okay, so you can do both in case you want to do both. And again,
and if you want the trifecta, start a Roth
Yep.
IRA for
there
them right
you go.
now.
Start one
My
of those.
gosh.
And for those of you on the
hold
line,
on. Don't give all. We got episodes
Well,
coming up, folks. We
That's
got
right. That's right, man.
we're already done for the day. But
Well, all right,
YouTube,
YouTube, special
Shout out
bonus.
Rogelio.
follower,
You guys get all
new
this fire
follower,
now.
Rogelio Lopez. Thank you for following us, man. We do appreciate you and
Yeah.
everybody that joined us tonight, man. I hope you guys are having a good time.
Man.
Add your
Hey, but
questions.
you know what?
We'll
Just
bring
real
back.
quick.
We'll bring them back.
Well, I still want to. I mean, we still got time
Yeah.
on
Yeah.
YouTube, so
And then
I'd
I'll try-
love for us to finish all this information. So just give me a second to go through all the info so our listeners and our viewers can.
Exclusive.
Yeah, I was
get
just
all
gonna
of
say, in
this.
all transparency, time got the best of us on this today.
Yeah, yeah, it certainly
We'll keep
did.
going. Let's keep going, though.
So, now what you've got to understand is if you take this money out before you transfer this account to your child, everything you take out, your principal is untaxed. However, the gains on that principal will be taxed.
Because this principal gets taxed a lot.
Oh man.
So your first $1,150 is untaxed. The next $1,150 is taxed at the kiddie rate, right? It's at the kiddie tax. And then everything else after that is taxed at your tax rate as the custodian. So the trick is to not take any money out and transfer it over custodialship, if that's a word.
I
You
think
pass
is.
it back to the child, to that beneficiary, without taking any money out. Then all they're responsible for is when they take that money out, the tax.
Hey, isn't it just custody instead of custodialship?
Yeah, transfer custody. You're right.
Yeah,
You're right.
see,
Randy.
you know, look at that.
I had,
This-
I
Yeah,
had to make sure. I had to
the
throw one of
please,
those in.
It's so good that you're here with us, Rennie.
So
glad
let's
that
talk
you're
about
able to join
some of
us.
the cons that have to go with UPMAs and UGMA. So if you're focused on financial aid, first and foremost, I've said it before, you are hustling backwards. Unless you're trying to get a full ride or a scholarship, if you're worrying about, oh my God, if I have this UPMA or my UGMA, it's going to impact my financial aid or my loans, we're trying to get you to not have those loans. So here's the catch. With a 529 account, your FAFSA, right? Free financial aid application, whatever it stands for, right? FAFSA, it impacts you differently. So with an UPMA and a 529 plan, and 529 plan will impact your overall tax or benefit by 5.6%, right? Because technically I'm the custodian, I'm the parent. They're using that as my funds, not necessarily as the child's funds. But the UPMA and the UGMA belongs to the child. Their social security number is tied to it. So it can actually impact your FAFSA by 20%.
Their ability to get financial aid.
By
They'll get less
20%.
financial aid.
Yeah. So.
Now, there's no tax benefit or break on these accounts when you're contributing or withdrawing, right? Meaning you can't write off your contributions like you can with the 529 account. If you're, for example, in New York, in California, you can't write off that 529 contribution anyway. But all of your withdrawals are tax-free in that 529 account, right? As long as it's used for school. It's not the same when it comes to your UPMA and your UGMA. You're going to get taxed on those massive gains because that's what we're aiming for in 18 years.
I don't know if you guys noticed, but Carmen, mentioned something that I wanted to touch on real quick. She had said earlier that she had added money, but it seems like I'm losing money because it's dropping. Right. And I just wanted to mention that, it is tied to the general market, and the market has been pulling back as of late. Right. But when you look at the long term, return, and the more time you have on your side, the less you have to worry about that. Whether it's a 529, whether it's a custodial account, like if you have time on your side, like that's why you do this. So you don't worry about the short-term fluctuations in those accounts. You worry about those maybe if you trade or whatnot, but otherwise you just keep stacking that and pretend like it's not there, and time will take care of anything that pulled back.
There you go.
I think that's always been the case over the course of the market's history.
And I think one more positive that wasn't covered with the UGMA is what you do with that money, how you get more control of where that money is invested.
Yes. Actually, that's a really good point, Chris.
And that's why I went to that, you know what I mean? Because 529 has limitations into where it can be invested and what type of funds it goes into.
Yeah.
But when I have, gurus like Jesse and Rennie help guiding me in decision making I'm making, I feel more confident in what investments I make in order to better the gains in that account for my child or my children.
Nice. All right.
Awesome. Well,
are we still gonna do bars or not?
You are technically the guest today. Why don't you sign us off, man?
Yes, sir.
Oh, all right. Well, coming at you live from Winnetka, California.
Winnetka 8.
Put him to sleep. He's next door, just chilling. Had to get that out of the way. I'm not there in person, but I'm there in spirit. So shout out to everybody from the Brown Skin Investors, Brown Wealth Radio. You know how we do every Wednesday, 8 p.m. Pacific.
To be specific.
Oh, we actually do have chemistry.
Sir.
Much love, y'all.
Peace. Shout out to everybody in the comments. We appreciate the interaction.
And the
Keep
new
that
one.
going.
Appreciate the new follower.
Shout out Carmen, Rogelio, DC, Monica, Vic, Mega Cat Vic,
Mega Cat Vic,
he's a Leo.
Brad, sometime soon we'll tell you who's rapping all these wonderful lyrics.
Oh, those bars will all be right there.
We were supposed to spit bars this week.
I don't know who that. He's lying. That's Spotlight. It's not that guy. That's Spotlight.
By the way, has anybody seen Spotlight? I haven't seen him in a while.
He ain't been around in a while.
All right, fam. We appreciate y'all. We'll check y'all next week.
Dukes.